Wouldn't it be nice if the check that you deposited over the weekend was approved and usable before Monday? Dude, if you're asking me, heck yeah. Hey boys and bears, it's Steven. Today I want to share why the current state of digital payment and finance is not only great for consumers and businesses, but also why I, as an investor, am excited for what is to come in this industry. Cha-ching. Sure, the stock market has been volatile in recent months, and even more so for crypto and much of FinTech. But let's put the price action and technicals aside, at least for this video, and solely focus on the fundamentals of this industry and the companies within this industry, and share why I believe that the growth potential for this industry is unchanged and is as interesting as ever. As a reminder, my videos are not financial advice, and these are just my personal opinions and just some food for thought. Now, let's continue with why I love FinTech and crypto. But first, some background on the industry to better understand what is working with the current technologies, what can be improved, and why there's so much more growth potential left. What is driving this movement are FinTech companies, which combines finance and technology, hence the name FinTech. And the products that they create allows us a number of conveniences. One example would be a breakthrough in how point-of-sale transactions can be provided to small businesses. So remember that small little brick that merchants can receive from Square that essentially turns their tablet into cashier machines that can accept credit cards? Now, if you ask me, I think that's ingenious because this allows point-of-sale transaction with credit cards to be more accessible, especially to smaller businesses, and it's all for a lower fee. Square is just one of many companies that offer such innovative products. If you're in the United States, you probably used PayPal before. If you're in Latin America, you probably heard of Mercado Libre. If you're overseas in Asia, maybe C Money or Alipay. I'm here in the United States, and I noticed that Apple Pay has become more and more popular, especially after the start of COVID, where contactless payment is preferred. Another innovation in this space is the peer-to-peer payment services, or the P2P service. You've probably heard of or even used Venmo or Cash App, for instance. Apple Cash is also very popular. These peer-to-peer services can allow you to easily send money to your friend who spotted you for lunch because you forgot your lunch money. Many companies are attempting to make their financial services into an ecosystem. This is really a win-win situation where the customers are happy because the services are well integrated together, and the businesses flourish by creating a platform that keeps the customers using their product and really confines them to the ecosystem. Another innovation is the digital wallet, which allows you to store cash for payment in the future. So going back to the example where you owe your friend some money, if you already have some cash in your digital wallet, then you don't have to retransfer the money from your bank account to the digital wallet again, making life a little easier. Now, many fintech companies and even traditional banks have now jumped on this bandwagon of offering such money transfer. Some of them even expanded to allow investment in stocks and sometimes cryptocurrency directly from your digital wallet or your digital account. While investing through such a platform might have a more limited selection of investment options and sometimes might not have all the bells and whistles of, saying, going with a traditional brokerage, the convenience may very well outweigh the limitations for many casual investors. If you're a buy and hold investor, for example, you probably wouldn't care about all the different order types that a traditional brokerage, say like Interactive Brokers, could provide you with. And these innovations are really just a few examples of the many different technologies that came out that FinTech has given to us in the recent decade, really. These payment technologies have become commonplace across many parts of the world. And to me, it makes complete sense because it is solving real issues that prior financial instruments, such as using cash or check or even credit cards to a certain extent, didn't allow us to do. Because these technologies make payment even more convenient, easier to use, probably even faster and more secure than, say, using a credit card, for instance. Many times, this is offered to you for free or a very low charge if you're an individual. If you're a business, the fees are also relatively low compared to what we had available previously. What we see being used in real life is being confirmed in financial statements. So let's take a look at some company financials. Let's take a look at Square, who recently changed their name to Block. In the recent quarters, increase in peer-to-peer transactions is the primary driver of their customer acquisition. Square also added the ability to send fractional shares and Bitcoin to friends and family, which makes their ecosystem even more complete. And not only is Square showing an increase in active users and transaction volume, looking at the Square app ecosystem shows a 37% increase in year-to-year gross profit. In Cash App specifically, we see an increase of 69% year-over-year in gross profit. If you're in Latin America, you might use Mercado Libre, where their total payment volume showed a year-to-year increase of roughly 52%, and their total payment transaction increased by 56%. Their digital accounts, which includes wallet payment, peer-to-peer services, is up 138%. Just like with Square, we see a similar pattern with Mercado Libre, where it's not just an increase in growth and the number of users, but their revenues in the fourth quarter is also up year to year, which is important when we want to make money as investors. If you're over in Asia, for instance, you might use C Money, where C reported a 90% increase year to year in active users, and the total payment volume for mobile wallets increased 70% year to year. Unfortunately, for 2021, their revenue for payment services is at a loss, but adoption of this technology cannot be denied nonetheless. Now, where it gets interesting, at least for me because I'm a nerd, are what are the limitations of the current technology? What are the possible solutions? Before we jump ahead and dive into cryptocurrency, let's understand the limitations of the current technologies to understand why cryptocurrency brings additional value. With the current technology, there is a middleman, whether that's the bank that you deposit money in or the FinTech app, which you use to pay your friend. They hold your money, not yourself. You don't hold the cash in your pocket. Sure, with the app, you might have the money closer to you and have more flexibility over how you can use the money. And it might be easier to use and easier to transfer money to another person. But there's still a middleman. And if you want to convert that to cash, well, it's probably going to take some time and effort, and you're not in full control of your money. And then there's the issue of having various currencies around the globe. So if you're trying to transfer money to your grandma who's in a different country from you are, well, the app that you're using better be available in both the country that you're in as well as where your grandma lives. And then there's the transaction fees, of course. So with all the drawbacks I just listed, I would say this is where cryptocurrency can help us solve some of the issues. With cryptocurrency comes some businesses that help make cryptocurrency even more useful. One of the companies that make cryptocurrency more useful is Silvergate, which tries to remove the normal banking hours, that's Monday to Friday and sometimes half day on Saturdays, and replace that with a 24/7 access and support where you can access your money 24/7. And this is not a fad. Silvergate already saw steady growth where they saw a 135% year-over-year increase in their net income. And then there's cryptocurrency itself, right? So despite all the cons that's standing in the way of mass adoption of cryptocurrency, which includes issues like making crypto more accessible and more usable for everyday use, the adoption of cryptocurrency is nonetheless increasing steadily in the last decade, and it's really only accelerating in recent years. So why is that the case? Well, cryptocurrency in general is very fast, especially for international transfers. It's open every day. It is pretty convenient, although we're still trying to solve some issues. And remember the middleman that I mentioned? Well, there is no middleman in the case of cryptocurrency. It is also relatively decentralized and definitely not limited to just one or two major parties. While this technology is still relatively new, interest in crypto is growing rapidly. We see many big players in the space saying that crypto adoption is showing exponential growth. We see the term hyper adoption being used, comparing crypto adoption to the dot-com era of the 1990s. Wells Fargo said in a report that cryptocurrency might soon hit a hyper inflection point. Institutional interest has been increasing steadily as well and accelerating, and some see cryptocurrency as a store of wealth. Even governments are taking a stance on crypto now, and it's mostly a positive thing, because you're taking notice of its potential. In the US, some states such as New York have a tougher stance on crypto exchanges, adding specific requirements that the exchange needs to meet before they can accept customers that live in that state. In Latin America, El Salvador became the first country to accept Bitcoin as a legal tender just back in 2021. More recently, due to the restrictions in banking and currency in Ukraine, cryptocurrency was used as a means to raise money as fiat is being restricted. And the raising money is not limited to Bitcoin, but Ethereum, Tron, Polkadot, and several other coins are being used. Even NFT is being used. Just a few months ago in the United States, the first Bitcoin futures ETF was also approved, which opens more doors to investors who were not able to get into cryptocurrency or Bitcoin for whatever reason. As a whole, global adoption of cryptocurrency has shot up in the past year, increasing over 880% based on Chainalysis data, with the highest rate of adoption being in developing countries. So this is a global phenomenon, and this is super exciting. All these advancements in cryptocurrency and fintech is not without its challenges, though, as I shared earlier, which includes its practical use as both a store of value, but also how do we use this practically to purchase goods in a store or even online. Governance and regulations is also a different issue. These are just a few things to consider before jumping into cryptocurrency if you're not already in this space. Nonetheless, the momentum and the acceptance by our society is real, not only by individual investors like myself, but also by the top dogs of this industry, the big shot investors, the billionaires, and even countries. Of course, nothing in life is guaranteed, and it's definitely true when it comes to investing and trading. So do your own homework before jumping in the deep and investing big. Hope you learned a thing or two from this video. If you enjoyed the content and want to see more videos like this, it'll help me so much if you can like this video and consider subscribing to this channel. Thank you, and hope to see you again soon.